Covered call ETFs, a type of investment that has gained quite a lot of popularity these past couple of years, but that is still quite unknown to most of us. It is why today we'll take a look at this special investment that can pay up to 20% of income to their shareholders on a monthly basis. So we'll see how it works, what are the pros and what are the cons, and we'll take also a look at what are the best options for Canadians. A covered call ETF is an ETF composed of multiple types of stocks that are usually tracking a certain index such as the Nasdaq 100 or the S&P 500. But the particularity of these types of ETFs is that they are also selling different call options on the different stocks that they are holding. A call option is a financial contract that gives the owner the right but not the obligation to buy a specific asset at a set price known as the strike price before a certain date, which is at the expiration date. So let's say that you want to buy some call option on Apple stock with a current price of $245 per share, with a strike price of $250 per share, and with a duration of 1 month. It means that on your side, you'll be hoping that Apple shares reach over $250 per share before the expiration date so you can make some money. It means that if in 3 weeks Apple stock is worth about $270 per share, you can decide to buy one or multiple shares depending on the contract for only $250. On the upper hand, however, if Apple stocks fall to about $230 per share, it means that you won't be able to use this contract to gain some Apple shares at a lower price. But to buy these types of contracts, it is important for you to understand that you'll need to pay what is called as a premium. A premium is basically the fee that you'll be paying to buy the option, as if you were going, for example, to the Ferris wheel and that you wanted to buy one ticket to do it. But in our case, what is pretty interesting about those premiums is from the seller point of view. In fact, the objective of covered call ETF by selling those premiums on the assets that they currently hold is that they are able to generate some income by the sale of it, and this income will usually be distributed to the shareholders directly in the form of dividends. So now that you have a better picture of what is a covered call ETF, let's take a look at what are the pros and the cons of it. With no surprise, the biggest pros of covered call ETFs is that they are distributing some regular and some high dividend income to their shareholders on a monthly basis. When you are buying a covered call ETF, you are not only earning some income from the dividends income of the companies that are held within it, but you are also earning all the premium income from the sale of their options. Another big pros of covered call ETFs is that they tend to have some lower volatility with more defensive characteristics compared to other types of funds. Indeed, by providing great monthly incomes from the sale of their different options as well as the dividends of their different companies, it helps them to mitigate the risk of a potential big bear market, because in fact it has been proven that these types of ETFs will tend to resist better and give more capital protections when it comes to big down markets. Also, another big pros of these types of investments is that they don't require you to have a big knowledge of all call options and how options trading works by themselves, because they will be all managed by a team of professionals. However, by having a team of professionals that will do all the trading in terms of the options, it will cost you a little bit more compared to what will be the average cost, for example, of passively managed ETFs. It's also important to understand that the higher fees that you are paying, the more it can have some impact on your total return in the long run. Unfortunately, covered call ETFs also have a certain cap when it comes to their potential for capital appreciation. And with their structure, it isn't that surprising that these types of investment vehicles will tend to underperform the market when it comes to big bull markets. Because as you know now, if their underlying stock rise above a certain strike price of their option, the fund will likely be required to sell the stock in question, limiting the future gains. Furthermore, the use of covered called options in the ETF tends to be quite more complex from a fiscal point of view, which can lead to less favorable tax treatment compared to the qualified dividends of the usual dividend companies. But now that you know what are both the pros and the cons of these types of investment vehicles in Canada, let's take a look at what are the best options for you. The first ETF on my list is the Hamilton Enhanced US Covered Call ETF with the ticker HYLD. At the moment, this fund currently offers an annual distribution yield of about 12.70% that is paid on a monthly basis. What is pretty interesting about this fund is that it is also tracking an overall sector mix that is broadly similar to the S&P 500. So it is basically tracking the 500 largest American companies in terms of their valuation. This fund is also having a 25% cash leverage at the moment that is notably useful to help them with their potential of growth. And when we look at more precisely the total return that it has been able to achieve, including the dividend income year to date, we can see that it has been slightly higher than 10%. Over the past year, this total returns achieved about 15%, and since the inception of this fund, it has been of about 9% of average annualized return. Sector-wise, we can see that by far the largest sector is the technology sector with about 36% of the total assets. And then the three other largest sectors are the financials, the healthcare, as well as the communication sectors. Then another ETF that can be interesting for you to have if you are looking to invest in covered call could be the Global X Enhanced Nasdaq 100 Covered Call ETF with the ticker QQCL. On its part, its annualized distribution yield is slightly higher compared to HYLD with a distribution yield of about 14.23% right now. And QQCL has the objective on its side to track the famous Nasdaq 100 index, which is basically an index composed of 100 of the largest American companies, excluding financial businesses. And so it means that by sectors, we can see that with no surprise, the technology sector is even more present in this fund compared to the first one with over 53% of their total assets. And then the two other largest sectors are the communication services and the consumer goods. And when we look at their annualized performance, we can see that year to date they are underperforming HYLD, but since 1 year we can see that they are massively overperforming HYLD as well. And since their inception, we can see that their average annualized return has been of about 26%, which is extremely great. Then another ETF that might be interesting for you would be the Harvest Diversify High Income Shares ETF with the ticker HHIS. On its part, this fund currently has the objective to capture a diverse selection of trending companies that are positioned for extremely great growth in the future. This means that in terms of the holdings of this fund, we can find well-known companies such as Tesla, Amazon, AMD, Meta, Microsoft, Netflix, and Palantir amongst their biggest holdings. But what is pretty interesting about this fund is that they are giving even more distributions to their shareholders every single month with about 25 cents per share per month, which would give us about $3 per share per year in distributions, or about 22.37% of annualized distribution yield. Then another ETF that can be interesting, but this time to track the Canadian market, would be the BMO Canadian High Dividend Covered Call ETF with the ticker ZWC. At the moment, this ETF only has an annualized distribution yield of about 6.15%, but you can see that what is the goal of this fund would be to provide exposure to a dividend-focused portfolio composed mainly of big Canadian dividend companies. It is why we can notably find some of the largest Canadian banks, as well as Enbridge, TC, and Manulife amongst the largest holdings of this fund. So it makes that with no surprise on its side, the two largest sectors of this ETF are the financials and the energy sectors that overall by themselves represents over 60% of the total assets. And in terms of their annualized performance, we can see that year to date it has been able to achieve over 12% of annualized gain, and over the past year it has been close to 15%. But since the inception of this fund, we can see that the average annualized return has only been of about 6.70%. Finally, the last ETF that I have personally put on my list when it comes to the best covered call Canadian ETFs would be the Harvest Bitcoin Leaders Enhanced Income ETF with the ticker HBTE. This fund is pretty interesting for people that have strong belief into the Bitcoin and the whole crypto market as an whole by basically investing into this particular market. On its part, it also has a leverage of about 25%, and they are giving a monthly distribution of about 33 cents per month, which would equivalent to about $3.96 of distribution per year per share, or an annualized distribution yield of about 18%. Unfortunately, since this fund has been created on the 30th of April of this year, it hasn't had enough data yet to promote and to show the performance historically of this fund. But as I mentioned, this one could be potentially interesting for you if you are looking to invest directly into the Bitcoin and the crypto market as a whole. Obviously, covered call ETFs can be a great option for older people or simply for people that are looking to maximize the monthly income that they receive every single month in their portfolio. However, personally, knowing that I'm still quite young at 26 years old and that I'm looking to grow as much as possible my portfolio in the long run, it isn't the best option and it isn't the option that I am looking for at the moment. But on your side, if you're looking to find what my own portfolio looks like, so what are the different individual companies and ETFs that I hold in my portfolio, well, check out the video. That's gonna be right over here and I will see you soon. Peace.